more and more people, big sophisticated investors, wealthy individuals, countries, all the above, are beginning to recognize that we are in a sovereign debt crisis. My sense is that they've made the bet on gold and have probably ignored Bitcoin. I'd like to see us, in some kind of a currency reset event, which I think will have to happen to deal with the terrible inflation that's downstream here. In some kind of a currency, reset event, I'd like to see us just skip gold and go to Bitcoin.
One of the primary reasons behind the shift toward Bitcoin and gold is the looming sovereign debt crisis. Governments worldwide have accumulated unsustainable levels of debt, which will inevitably lead to a monetary reset. Central banks have been aggressively purchasing gold, signaling their awareness of the instability in fiat currencies. Lepard points out that gold purchases by central banks have reached record highs in recent years. This suggests that they are preparing for a financial restructuring, where traditional fiat currencies may lose significant value. While gold remains a preferred asset for many central banks, Lepard argues that Bitcoin could play an even more crucial role in a future monetary reset.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin's better than gold in terms of sound money. I mean, gold is old-fashioned sound money, and it has the benefit of, it's been around for 5,000 years. Everybody knows what it is, and it's not very volatile in terms of its price. The biggest drawdown ever was right after 1980. It was like in the low 30s. As you know, Bitcoin has had multiple drawdowns of over 70%, 3 or 4 of them. And that's because we're in early days in the adoption curve, and it's either going to the moon or it's dead. The emotions on it are quite extreme. But, Bitcoin enjoys a couple of really substantial advantages over gold. One, you can verify it. You see the blockchain. Somebody say, this is my address. You can look at it and go, oh, yeah, you do have it. I get it. Two, you can move it very quickly. You can, in 10 minutes, you can do a transaction. I mean, try doing that with gold. You got to load it onto an airplane or boat, and it's heavy. You got to verify it. I mean, there's been a lot of fake gold out there. There have been guys who've been, there are beliefs in China where they were taking tungsten, which is close to the same weight, and coating it with gold, saying it's a gold bar, but it was really a tungsten bar with a gold wrapper on top of it. And you can lie about how much of it you have because it's centralized, not distributed, whereas Bitcoin is distributed, not centralized. So everyone can look at the entire blockchain and know where the coins are and how many are in each address and so on and so forth. That's verified on a regular basis. So, China claims they have a certain amount of gold. I think they have more than they claim they have. We claim we have a certain amount of gold. I think we have less than we say we have. I mean, it's just a more opaque market. And, when Bitcoin got invented, they created triple entry accounting, a debit and a credit, but also a third entry, which is somebody can look at it, the ability to see it from outside the system. You can go and see the address and see that the money's really there, which is a very powerful idea. Emirates has been hodling Bitcoin. So has Oman, so have the Saudis. From what I hear coming out of Putin, and he's talked positively about it, thinks you can't stop it. And you watch the hash rate over in Russia, I think there's a decent chance that they're accumulating it. The one I think is kind of missing the boat, and I could be wrong on this, they're very smart people, but is China, because they've typically been very hostile towards it, and they've been huge buyers of gold. And so my sense is that they've made the bet on gold and have probably ignored Bitcoin. I'd like to see us, in some kind of a currency reset event, which I think will have to happen to deal with the terrible inflation that's downstream here. In some kind of a currency, reset event, I'd like to see us just skip gold and go to Bitcoin. I think it would give us a strategic advantage over, China, Russia, and the Middle East. But, as a practical matter, there are probably a lot of people who are just like, oh, no, gold is tried and true. Let's go there. So we'll have to see how it unfolds. More and more people, big sophisticated investors, wealthy individuals, countries, all the above, are beginning to recognize that we are in a sovereign debt crisis. And they're beginning to think to themselves, well, how does one protect against that? And the oldest form of money that can't be debased is gold. I mean, certainly central banks have got that. I don't have the charts right in front of me, but if you Google them, you can find them pretty easily. central bank buying of gold has been very large and consistent and growing for the last 5 years. So, and central bankers are monetary wizards who kind of watch things very carefully. And so the fact that they're doing that, that's a tell, that they think it would benefit their country to own more gold rather than less. They're not selling their gold. There are other times when central banks have been net sellers of gold, but that's not true at all right now. No, they're making record buys. So it feels to me like there's a knowledge and a trend coming where, sound money assets, gold, which is analog sound money, and Bitcoin, which is digital sound money, are going to perform pretty well. I mean, I know that on Bloomberg, the analysts are saying that the $2,900 gold price, they're projecting a year out, it's 22, that this is kind of a blip and it'll get solved and go back down. And I'm like, what are you guys thinking? I mean, I think in a year out, it's going to be 4. I think in 3, 4, 5 years out, it could be 10,000 an ounce. I mean, it's, there's a lot of demand behind this. And when a gold bull market gets going, it tends to really multiply in value. It's similar to Bitcoin in that way.
Another major issue is the potential instability of the paper gold market. Lepard compares it to a game of musical chairs where multiple claims exist for each physical ounce of gold. In the event of a financial crisis, investors may demand physical delivery of their gold, exposing the system's lack of actual metal backing. Recent developments, such as increased lease rates and delayed gold deliveries, suggest that the market is under strain. A major disruption could lead to skyrocketing gold prices, similar to how Bitcoin experiences massive price surges during supply crunches.
Those of us in the gold community are very suspicious of the Fed's claim that we have 261 million ounces of gold in Fort Knox, West Point, in Denver, and San Francisco. And the reason we're skeptical is because since 1953, it hasn't been audited. And, they ran a gold pool, a London gold pool from 61 to 68. And, some of it easily could have been sold into that. And, it was a big honeypot that maybe the government tapped. We just don't know. But the fact that, it hasn't been audited, and the excuse, by the way, a lot of people have asked for that audit, Ron Paul and others over the years. And the excuse was always, it would be too expensive to audit it, which is just hilarious to me. I mean, you got a government spending, $6.75 trillion. Just counting a bunch of R's. I mean, that, maybe it would cost a couple $100,000, but it's compared to some of the other things government spends money on, it may not be a better use of the money. So, Scott Bessent, the Treasury Secretary, just came out this morning and said he's sure the gold is there. Now, that to me was like a tell, because he knows that people are worried about it. And so he felt like because generally speaking, they wouldn't even talk about it, right? They don't, government officials are loath to talk about gold because they know it doesn't help their case. So the fact that he had to say something indicates to me that he's getting questions about it, right? So that's point one. Point two, he parroted what has always been the line where I'm sure the gold is there, I'm not worried about it, which of course, he's an official of the government. He kind of has to say that. But, and then he went further and he even said, and any senator is welcome to come take a look at it. Well, I hope somebody takes him up on that. And it'll be somewhat tough to find, somebody who can go down and do it. And probably more importantly, the tougher thing is actually the gold may be there, but what you don't know is what's happened in the Exchange Stabilization Fund, what's happened in the Federal Reserve's dealings with. The Federal Reserve is authorized to deal with central banks, large entities all over the world. And what you don't know is how many times over has the gold been sold? How many people think they own gold but don't? I kind of compare it to a game of musical chairs, where those of us who are in the gold community have watched this for years as they've sold more and more paper claims to the same ounce, in our opinion. And whether it's 10 claims per ounce of that we hold or 100, it doesn't matter. If suddenly everybody starts to doubt the trustworthiness of the people who hold the gold and says, yeah, I get it, I got a claim on it, but I just assume, why don't you just give me the ounce? Why don't you deliver it? Well, that's like the musical chair game where the music stops, everyone looks for a chair, and there aren't enough chairs. So yeah, that's kind of going on in the background. But to be fair, I've seen this stuff before, and they'll find the gold somehow, and they'll probably hold it all together. I think at some point that scheme could blow up, but I would not be prepared to say that some point is right now. Having said that, there is kind of smoke coming out of the windows. The lease rates are high, the delivery times are long. There was a Swiss refiner that recently said they didn't have the ability to sell any bars for the next 6 weeks, 8 weeks. So there is there's notable tightness in the gold market right now, which again, I think that reflects the notion that deflation is actually a very good thing and something you want, because what it means is you can buy. Deflation suggests that your economy is getting more efficient. You can buy more for less in the future, and that savers are rewarded, not debtors. It's the natural state of economies. It's the way the United States was in the 1900s or 1800s when we were on the gold standard. And it's really the highlight of Jeff Booth's book, where he says, deflation is the natural condition of a well-functioning economy. Things should get more efficient, cheaper, et cetera, over time. The problem is the monetary system we're running is structured with debt and more debt on top of the old debt. And so it's set up in a way that actually requires inflation, because if you had deflation, the debts would go bad. And so the conflict here is we're trying to run an inflationary, a deflationary economy where technology is allowing us to do more for less and cheaper and faster. We're trying to run that on top of a monetary system that needs just the opposite of that. They need constant inflation, or else they're going to die. And so it's really a challenge, to integrate those two thoughts. But I think that over time, the sound money side is going to win out, because I think what will happen is the inflation's, we're in the 70s in my view. We've had one big wave of inflation. They raised rates, they tamed it. They'll now probably start cutting. We'll get some more unemployment. The sound rule will get broken solidly. I mean, it was broken, but then it traded right back to what it started at. And they'll start printing. They'll have to, because if they let it die, I mean, that just doesn't serve their interest. It doesn't serve anyone's interest. And so, what the government always kind of figures out, it's easier to explain away the inflation than it is to explain away an economic collapse, like the Depression. So I think there's a very high probability we will have serious inflation in our future.
Lepard strongly believes that inflation will be a defining issue in the coming years. He compares the current situation to the 1970s, where inflation surged, leading to aggressive interest rate hikes. While temporary measures may seem to control inflation, the underlying structural problems remain unresolved. Central banks face a dilemma: allow a deflationary collapse or continue inflating the currency supply. Given that deflation would lead to economic collapse and widespread defaults, policymakers will likely resort to more money printing. This will further devalue fiat currencies, making sound money assets like Bitcoin and gold even more valuable. Please like and subscribe.